What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, what's moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is down 4.53%, 841 the low, 931 the high. So a lot of volatility. We are also seeing very low volume. So 134 million shares being traded. 341 is the average. During the pre-market, things were actually looking very good. That Opendoor was going to hit most likely that $10 range, or at least test that. But once the market did open, clearly, big money had other plans. A lot of this push lower was because of shorts. So I'm going to go over what they've been doing and what their strategy is. But what is causing all of this crap today, not just with Opendoor, but the broader market, is Fed speakers. So a lot of hot topics are being brought up, such as inflation. And you did have some Fed speakers even say, given the data that's been coming out, we might be entering into a period of stagflation. I could not disagree more, only because a lot of the inflationary data that we've received is showing that it's flat, if not going down slightly. And I do tend to agree that a lot of the labor data has not been great, but Powell's already addressed that. So in general, I don't think that we're going to be needing to have higher interest rates whatsoever. So I don't believe that we'll be entering into a period of stagflation. Then again, that seems to be a very hot topic in the broader market. Anytime a Fed speaker has ever mentioned stagflation, the market just kind of freaks out. At the same time, you do have a lot of big brick and mortar banks. I think it was JP Morgan CEO did state today that 2026 might be rough. And this isn't the first time. I believe Deutsche even mentioned that a couple days back, that the chances of a recession in 2026 is going up and up. So I think just generally people are kind of worried. And of course, someone mentioning stagflation isn't great whatsoever, even though I do tend to disagree. Aside from the Fed speakers, we haven't really had that much in data today. So it's more just linked to that. Aside from all that, shorts. So at the time of doing this video, they are returning 893,000 shares. 20.01% of the free float is being shorted, works out to be 141 million shares overall being shorted. So the fact that shorts are returning on this red day shows that they don't feel like it's justified. That's just how I interpret it. But as I mentioned, technically shorts did cause this right here, this push lower first thing, because at the peak first thing, they were increasing about 9.5 million shares. So this is exactly what they do. They hit it hard and fast, cause it to kind of trigger all the stop losses, and then they just taper off and they return. That's a very common strategy that Opendoor shorts do. So again, something to keep in mind. Looking at the options, 31 million in calls, 7.6 in puts. 48% of all the options being done are bearish in nature, but most of that was done in the first half of the trading day. So not really counting how Opendoor is starting to recover. Aside from all of that though, from a bull standpoint, you see a consensus for it to be roughly around that $10 range or above by this Friday. Bears are anticipating for it to be sub, looks like 750 to 8. So definitely a lot more upside is anticipated, but the frequency is more oriented towards down. Again, most of that was done in the first half of the trading day. These are all the transactions occurring on the secondary market above $100,000, oriented based on highest premiums down. And ultimately, you see a lot of institutions actually buying the dip. So this is why I like to look at a lot of the data and not really just look at the chart. It's way too many people look at the chart and just assume the worst. But big money is actually buying Opendoor today. There is obviously some selling, but majority and the consensus is that there's a lot of buying. So algorithmic trading and shorts, they're just trying to manipulate Opendoor, in my opinion. These are all the transactions occurring on the dark pool above $100,000. On a side note, there hasn't been anything from Kaz today, so he's been kind of quiet. The last post he did was about 14 hours ago, and I already brought that up in a previous video. So nothing really crazy with it right now at 896. It is recovering fairly well, and is currently between this R3 and this R2. 889 is going to be that strong support, followed by 864 and then 824. Flip side, 930 is going to be the next strong target / resistance, and it kind of bounced off of that general area. So 931 was the high. So it is following the technicals despite the market largely manipulating it in many aspects. But aside from all of that though, popping quickly over here, you do see on the actual chart, it is still above that 10-day moving average. So things are still looking pretty a-okay. Looking at the market position, you see a little bit more willing sellers, unfortunately, but given the circumstances, I think that's fair to kind of assume that would happen. But nonetheless, yeah, I think right now it's just following the technicals, and most likely the market's actually calling out the BS. And this is why you're seeing Opendoor and some other stocks get bought up based on the options though, the unusual options. So quickly, I always like to orient it, just look at the last day as well as single leg. This does truly show what big money is truly doing, especially if you want to look at the out of the money ones right here. So this run right here, 138% out of the money. It is bearish, $21 call, and that is for January 16th, 2026. So big money, looks like about 294,000 in premiums, is assuming that Opendoor is not going to be above $21 by January 16th, 2026. But then again, they probably got some pretty good premiums just based on that. So they did sell 3,000 at a price of 98 cents. So again, they feel like it will be below $21, but then again, technically that would be a pretty good return on investment given where Opendoor is truly at. But as you can kind of see right here, just orienting based on the premiums top down, looks like most of them are bearish. You do have some bullish ones for it to be, looks like selling $9 puts. And so of course, given where it is at, that's seen as bullish, and that's all expiring this upcoming Friday. So take the time to research some options. And as I've mentioned in the past, if you do truly believe in Opendoor, take advantage and do options. This is where you can make some very, very serious money. So for instance, if you do assume that it's going to go to, let's say for instance, $14 or $82, whatever floats your boat, by let's say January or February. So technically you can do a long call spread that would give you a return on risk 555%. So even though the stock price itself would go up maybe 80%, if you do options, you're making 555%. So take the time to research options. It's can be very, very profitable and very beneficial. But again, moral of the story is you need to have commitment. So if you do believe in Opendoor going higher, then definitely have at it. So let me know your thoughts on Opendoor. What do you believe is the next big catalyst for Opendoor? And do you think that we are entering into a period of stagflation? So what's your general thoughts on that? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. On a side note, if you do want all of this information and access to some pretty kick-ass tools for options, pop over to Moomoo. I do have a link in the description below. Plus, it will give you $50 if you do deposit $100. So that's a pretty good return on investment as well in among itself. So definitely sign up for that. And then one final thing, pop over to my Patreon. I do give buy signals on stocks, options, crypto, put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.